Are you tired of losing because of a wrong stop loss? I will show you a proven stop loss strategy for price action trading Forex. I will explain how to identify a safe stop loss level for any chart pattern that you trade. Like this video, subscribe to my YouTube channel and learn how to put stop loss easily on any time frame, and no matter whether you are day trading, scalping or swing trading. To correctly put a stop loss for trading price action chart patterns, first let's discuss two major types of chart patterns that you should know. The first type of chart patterns is called trendline based patterns. In this category, we include all the chart patterns that are based on trend lines. For example, parallel channels, wedges, and the expanding wedges. In all of these patterns, trend lines are used as safe entry points and as confirmations. For example, let's take a rising parallel channel. A support of the channel is a very safe point for us to buy from. That is the point where we can buy, anticipating a bullish movement. At the same time, a bearish breakout of the support of the channel will provide a strong bearish confirmation and a signal to sell. The second type of chart patterns is called neckline based patterns. In this category, we include the patterns that are based on a horizontal neckline. It can be double top or bottom head and shoulders, and the inverted one cupping handle, and the inverted one descending and ascending triangles. In all these patterns, the main element is the horizontal neckline, and its breakout provides the signal for us. For example, a bearish breakout of a neckline of a head and shoulders pattern will provide a strong signal to sell. Here's how we set a stop loss for trendline based patterns. Let's take a rising parallel channel. As we discussed, the safe point for us to buy the market from is the support of the channel. To set a safe stop loss, we will use Fibonacci extension tool. We will need to analyze the last bearish movement, the movement from the high of the channel to the support of the channel. We will take Fibonacci extension tool, and from this high to our entry, we will draw Fibonacci extension. And the only Fibonacci level that we will need will be 1272. That will be our safe stop loss, and that will be a very perfect level for us to set a stop loss. Learn how to trade in my trading academy. Watch how I trade live on VIP daily live streams. Get the access to my VIP signals group and get my trading courses. For more info, check the link in the description below. Check this rising parallel channel on gold on an hourly time frame. You can see that the price is now testing a support of the channel, and for us it is a very safe point to buy the market from. In order to identify a safe stop loss for that trade, we will take the high of the channel and the point from where we buy, the point where the price touches the support of the channel, and then based on that we will draw Fibonacci extension from the high of this movement to the point where the price touches the support of the channel. We draw Fibonacci extension, and that is our safe stop loss for buying gold from the support of the channel. Once we open our long position, here will be our stop loss level. The logic in that stop loss placement is that our stop loss depends on the length of a price action movement. The bigger is the lag, the bigger will be our stop loss. For short-term scalping trades with small price action legs, your stop loss will be smaller, while for extended swing movements and swing trades, your stop loss will be bigger. And this Fibonacci based stop loss adjusts automatically. In the falling channel, our safe place to sell the market from will be the resistance of the channel. That will be the point from where we will sell, and in order to set a safe stop loss, we will need to analyze the last bullish movement. A bullish movement from the low of the channel to the resistance of the channel, to the point from where we sell. Based on that movement, we will draw Fibonacci extension. From the low of the channel to our entry, we will draw Fibonacci extension, and our safe stop loss will be 1272 extension. That will be your best and safest stop loss. On the dollar yen pair, we have a great example of a falling wedge pattern. You can see that the price is now testing a resistance of the wedge, and it provides a very nice and safe point to sell the market from, anticipating a bearish continuation. In order to find a safe stop loss for our trade, we will need to find the low within the wedge and the point where the price tested the resistance of the wedge. Here is this price movement, and based on this price movement, we will draw Fibonacci extension. From the low of this movement to the high of the movement, we draw Fibonacci extension, and our safe stop loss will be 1272 extension. A bullish breakout of a resistance of a falling wedge pattern will be our strong signal to buy. Once the market violates that, we can anticipate growth and we can buy, expecting a bullish continuation. In order to set a safe stop loss, we will need to analyze our last bullish movement, the movement from the low of the wedge to the point where the wedge was broken, our entry point. And then what we do, we simply take Fibonacci extension, and from the high of our impulse leg, from our entry to the low of the wedge, we draw Fibonacci extension, and our safe stop loss will be 1272 extension. That is where your stop loss should be. On New Zealand dollar pair, we have a confirmed breakout of a resistance of a falling parallel channel, and that is the signal for us to buy, and we can expect that New Zealand dollar will continue rising. To find the safe stop loss for our trade, we will take our breakout candle and we will take its high, and then we'll need to find the low of the channel. Based on this price movement, we will draw Fibonacci extension. From the high of this movement to its low, we draw Fibonacci extension, and our safe stop loss is 1272 extension. Now let's take this rising wedge pattern, and as we discussed, the breakout of the support of the wedge, a breakout of that trend line can provide a strong signal for us to sell. To set a safe stop loss, again, we will take our last bearish movement from the high of the wedge to the low, to the point from where we are selling. We will draw Fibonacci extension, and this Fibonacci extension tool will help us to find a safe stop loss for our trade. 1272 extension will be our safe stop loss level, and that will be the place where we should put our stop loss. On the dollar CAD pair, we have a confirmed violation of a support line of a rising wedge pattern. For us, it is a strong signal to sell. Once this candle closes below the support of the wedge, that is the signal for us to open sell position. To set a safe stop loss, we will need to take the high of the wedge and the low of this breakout. After that, we take Fibonacci extension, and from this low to the high, we draw Fibonacci extension, and our safe stop loss for selling dollar CAD is 1272 extension. Here is our safest stop loss. And here's how we set a stop loss for neckline-based patterns. In bearish horizontal neckline-based patterns, our signal to sell will be a breakout of a neckline of the pattern. And before we sell, once we spot a breakout, we will need to find a safe stop loss for our trade. To do that, we will need to find the highest high of the pattern and the lowest low of the pattern, the lowest low within its neckline. And based on that, we will draw Fibonacci extension. From this lowest low of the pattern to its highest high, we will draw Fibonacci extension, and 1272 extension will be our safest stop loss. Once the neckline of the pattern is broken, here will be your safe stop loss. Please check a completed head and shoulders pattern on a euro-dollar pair in a 4-hour time frame. You can see that the price successfully violated neckline of the pattern. We have its confirmed breakout, and that is the signal for us to sell. But where will be our safest stop loss? In order to identify the safest stop loss, we will need to identify the high of the pattern, the highest high, and the low of the pattern, the lowest low within its neckline. And based on that impulse leg, we will draw Fibonacci extension. From the low to the high, we draw Fibonacci extension, and our safe stop loss for trading this pattern will be 1272 extension. Here will be our safest stop loss. In bullish neckline based chart patterns, our signal to buy will be a bullish breakout of a neckline of the pattern. But before you buy, in order to find a safe stop loss for your trade, you will need to find the lowest low of the pattern and the highest high within the neckline. Based on that, use Fibonacci's, and from the highest high of the pattern to its lowest low, draw Fibonacci extension, and your safest stop loss will be 1272 extension. Once the price violates an incline, buy and set your stop loss with 1 to 72 extension. Examining this cup and handle pattern on a dollar-yen pair, you can see that the price successfully violated its neckline and we see its retest. So it is a very nice moment for us to buy dollar-yen, anticipating a bullish continuation. But where will be our safe stop loss for that trade? We will need to find the lowest low of the pattern, here it goes, and the highest high within the neckline, here it goes. And our stop loss will be based on the extension of this impulse leg. From the high to its low, we'll draw Fibonacci extension, and our safe stop loss for buying this pattern will be 1 to 72 extension. This simple method will help you to always put a safe stop loss. Integrate that in your trading plan and avoid losses trading price action. Let me know, traders, in the comment section if you have any questions. Also, traders, learn how to trade in my trading academy. For more info, check the link in the description below. Also, traders, please watch my other videos.